I'm Jesse Mackey, CIO of 4Thought Financial Group. This is 4Thought's market perspective as of April 6th, 2021. Most stock types are outperforming bonds by a widening margin so far in 2021. U.S. small and mid-cap stocks have surged past their U.S. large cap and non-U.S. stock counterparts this year as well. Back on November 9th of 2020, the S&P 500 index had fully recovered from its September 10.55% downward correction and had achieved a new record price. It's packed on additional gains of about 11.85% since then, as of the close of business yesterday. Prior to this, the rapid recovery from the last bear market low point on March 23, 2020, met our technical definition of a new bull market. It's now been just over 1 year since this bull market began. Historical data indicates once a new bull market has been confirmed, which happened on August 18th of 2020, when the index had recovered and achieved a new record price, the shortest time period on record since 1950 before the beginning of another bear market was only 6 days, and the longest time on record was approximately 7.44 years, with the average coming in at about 2.44 years. Approximately 7.7 months have elapsed from the point of bull confirmation in this instance so far. We also note that there's usually been at least one 10% plus correction, but often several, between most bear markets in history. The average time between the end of one correction or bear market and the start of another is a little over 1 year. The first correction in the current bull market was completed about 6.47 months ago on September 24th. We like to refer to the combination of a correction and its corresponding recovery as a wolf market. Our data set also tells us that about 55% of wolf markets, like the last one we experienced, have been followed by a period that exhibits trailing 1 year returns of 30% or greater, something we refer to as an eagle market. The first eagle market subset of the current bull market was recently quantitatively confirmed on March 1st and has continued since then. Once an eagle market has been indicated, its continuation is generally relatively short-lived, lasting an average of about an additional 5.35 months. They sometimes end as quickly as the same day they're confirmed. Eagles may be followed by any of the other three market types, including a flattening of growth rates to return to a standard bull market or an immediate reversion into a wolf or bear market. However, given that stocks are still early in the traditional broader bull-bear market cycle by historical standards, an immediate bear market, although certainly possible, is the least likely of the various scenarios. However, from a probabilistic analysis perspective, valuations tell a story that's far more negative for stocks and favorable only for some pockets of the bond markets. On this basis, virtually all stock types are registering as either significantly or highly overvalued. Bond types range from moderately undervalued in the case of long-term U.S. Treasury bonds to moderately overvalued in the case of emerging markets bonds. Against this backdrop, the outlook for stocks is now neutral to negative in the intermediate term based on the overall aggregate of our historical market type data analysis and quantitative probabilistic analysis. U.S. small cap stocks are the best performers so far in 2021, while U.S. aggregate bonds show the worst year-to-date performance. Long-term U.S. Treasury bonds now reflect the most attractive pricing relative to the alternatives, while U.S. small and mid-cap stocks are the least attractive. With regards to allocations amongst investment methods, we're now allowing overweight allocations to opportunistic investing, neutral allocations to strategic asset allocation and liability-driven investing, and underweights to selective concentrated investing. I hope this was helpful. If you have questions you'd like to discuss what this means for your particular situation, please contact 4Thought at 516-300-1617 or info@4tfg.com. And don't forget to subscribe to our blog feed and our YouTube channel. Thanks for watching, and see you next week.